Hey traders, Mike here. Welcome to my weekly Trader Psychology live stream series where I help you with the mental side of trading. All right, today what we are going to talk about is how to beat the stock market in 2025. And first of all, want to wish everyone a happy new year. Hope you guys had an incredible 2024 and looking forward to helping you make 2025 an incredibly profitable one. All right, so let's get started. So just normal disclaimer, please consult your financial advisor before making financial decisions. All right, what I'm going to talk about today is I'm going to share with you 7 ways that you can potentially beat the stock market in 2025. Now, I'm not going to talk about technicals. I'm not going to talk about strategies. What I'm going to be sharing with you is basically some key concepts that you should consider whether you are a beginner trader or whether you're an experienced trader. Some of these things that you should keep in mind in order for you to potentially beat the stock market in 2025. All right, so let's get started. So the first one, again, very, very simple one, especially for those who are new to trading. You have seen a lot of your trader friends or people around you make a lot of money in 2024, whether it's in Bitcoin, crypto, stock market, Nvidia, whichever type of stock out there, is that you need to first of all understand the rules. And I kind of talked about this in last week, is that if you are a beginner trader, make sure that you understand the rules. Make sure you understand how the stock market game is being played before you dive right in. And again, for those who are quite new, it's very easy to just basically, you see all these people are making money, just dive right in before you actually know what you're doing. So that's what I would suggest you not do, is before you get into anything, before you dive in, before you invest or trade your hard-earned money, learn the rules. Okay, understand how the stock market game works. And again, I know some of you guys will be saying, well, again, this is just standard, it's nothing new. We just obviously need to know, acquire knowledge. But what I wanted to really emphasize to you, it's really about building that foundation. Okay, it's really about not trying to get rich quick or being able to have shortcuts. And I can tell you, short term, maybe perhaps you didn't need to necessarily have a lot of knowledge or need to understand how the rules of the game are being played, and you just dive right in and you maybe are in the right time or the right place. But I can guarantee you that if you are looking at trading, has a long-term career, has something that can generate a return, a profit for you, make sure, again, you develop a strong foundation first before you implement or before you put your hard-earned money at risk. All right, the second way in terms of being able to beat the stock market in 2025 is, kind of talked a little bit about this already, know how the game is being played, right? Know how the rules are, know essentially some kind of basic stuff, which I'll kind of share with you, is that you think that if the market, let's just say, for example, is incredibly strong, everything is going well, and you're thinking, well, the market's going to keep going higher and higher, right? Lots of enthusiasm, but understand how the game is being played. Keep in mind that the stock market is a game. There are winners on one side, okay, and there has to be a loser, right? Because essentially, if you are buying at $5 and selling to someone at $10, then the person at $5 made double his money. Well, there needs to be someone who bought at $10, right? And if that stock suddenly goes back to $5, then the person who obviously sold at $10 made a profit, but the person who bought at $10, who sold at $5, made a loss, right? So understand how the game is being played, in a sense that, for example, I've seen scenarios where, or actually very common scenarios, is that a company reports earnings, incredibly positive earnings, blew out the forecast, everything is all positive, but yet when the company announces earnings, the price goes down. And you're thinking to yourself, because this is kind of where I thought in the beginning, like when I first started my career, is why is the stock price falling when they just reported good news, right? It bewildered me, but has again, you learn how the game is being played. Is there is a saying, buy on the rumor that the company is going to report good earnings, and then once the company reports good earnings, sell on that news. So it's you got to look back at, okay, well, the company report great earnings. You're thinking, why did that stock price fall? Well, if you look back in history, maybe perhaps a month or maybe a few weeks before the company reported earnings, the stock price already climbed up 50% or 100%. It climbed up very, very sharply already. And now the people who are actually selling, the reason why the price is going down is now the people are taking profits. So you got to know how the game is being played, because you're not reacting according to news that is already built into the price. You are essentially, buying something when the news has already been released, right? You want to buy in anticipation, or at least be able to determine, well, okay, how do I think the company is going to report earnings? And if the price is going up prior to earnings, well, it's people essentially speculating or betting that the company will report good earnings. So you want to follow the crowd. So this is kind of where I meant by know how the game is being played, because if you just look at it from a textbook standpoint, then you're really missing and you're not really knowing how people are positioning themselves. And again, there are lots of games being played of people spreading rumors, on a certain stock to get you to get in or to scare you out. So again, keep in mind some of those rules. And again, I've shared a lot of those rules in some of my previous videos of where they're creating some type of negativity to get you to get out, right? Then you dump your stock and then the price goes up, or vice versa, where they give you lots of positive news and then actually, in fact, the company's actually not doing well, and hence the stock price goes down in value. All right. So the third thing is through follow the money. As I was mentioning earlier, is if the price is going up in your favor and you see lots of volume, lots of buyers basically riding this price up, well, follow the money. Where is the money flowing towards? Couple of examples to share with you guys is, if you see on a negative day in the markets, particularly this past week, except Friday we had a really good movement. Which sectors were in the red and which sectors were in the green? So you can follow the money. Where are people betting that a certain sector, a certain stock is not doing well? And where are the people betting that the sector or company will do well? So you're essentially following the money. You're following not just in terms of what you perceive, you're following where is the money flowing towards. Now, obviously, in last year, the year of AI, you were following the money, and especially if you've made money, you were following the money into NVIDIA, AMD, all the Microsoft, right? All the players who were heavily invested in AI. So what you want to do is, obviously, you want to look at certain sectors, perhaps that the money is going to flow in. And if you start seeing that the money is flowing in, then obviously your assessment is right, your assumption is correct. So you follow the money. And you follow money in terms of where people are putting their money in specific sectors, specific companies, and obviously you want to avoid the money, or you want to avoid the sectors or stocks that money is not flowing in. And in fact, you see heavy selling in those areas. So that's what I mean by following the money is you're not trying to be the first one to get in. You're not trying to be the one that's buying at the bottom or selling at the top. You want to try to essentially make money in between. And this is why you want to follow the money. The big money will always be telling you, hey, which sector, which stock is going to continue going higher or going to go higher in 2025. All right, next one, in terms of what you should be doing in terms of how to beat the markets in 2025 is stop listening to analysts. And again, these analysts, have their own particular agenda in terms of being able to do or provide certain upgrades or downgrades on certain stocks. Now, I am not saying that when a prominent analyst announces, say, hey, I think Apple stock or I think this ABC stock will go up to this by the end of 2025. Okay, now nobody knows. Okay, they could obviously use certain metrics in terms of valuations, in terms of growth, many different criteria to help them determine a specific stock price. But don't just listen to these analysts obsessively just because they said, hey, this stock is over or undervalued, it's going to go here. I'm not going to sell until it reaches that price or above that price. I mean, that essentially you are listening to an analyst make your financial decisions or make your trading decisions for you. So what you can do is that you can hear the analyst out. Okay, maybe perhaps it's a prominent analyst, maybe a Goldman Sachs analyst, Morgan Stanley, someone from a prominent or influential analyst. You can use him as a guide. And again, if he announces that this certain stock is worth this, it has further upside, and the price responds and goes up accordingly, okay, follow him, right? But don't use their analysts or their guidance or their predictions as a way for you to determine whether you should buy or sell a particular stock. All right, the next one that I want to talk about, and again, this is incredibly important, is in one way in terms of beating the stock market in 2025 is to cut your losses quickly. Okay, is that if you are wrong on a certain trade that you get in and it's going against you, you have a stop loss to protect you and say, okay, the price gets down to here, get the heck out. Okay, and I will probably see some of you experience a scenario where you get into a particular asset, it doesn't go in your direction, and you incur a loss. And suddenly that loss, because you don't want to take the loss, you keep holding it. Suddenly this loss is supposedly a very small loss become bigger, bigger, and bigger, and bigger, in a sense that you get to a certain scenario where the losses become so painful that you just basically, you throw in the towel, exit, and then suddenly, supposedly a small loss turns into a big one. That's not what I want you to do in 2025. If you want to beat the stock market, and it's really funny to say this, if you want to beat the stock market in 2025, any losing type of position, get out of it right away. Okay, I've worked with many students this past year in 2024, and I can tell you that a quarter of my students had essentially lost more. Oh, sorry, pardon me. Their win-loss ratio was below 50%, meaning that of every 10 trades, less than 5 trades were profitable. And in fact, some of them were only profitable 3 out of 10 times. But I'll share with you is that all my students in 2024 made money. Now, how does that make sense? You lose more or have more losing trades than winning trades. And it's the same analogy, is that your losers are small, your winners are big. Okay, so if you want to beat the stock market in 2025, cut your losers quickly. Okay, and it's normal to lose money. You just got to make sure that you make more than you lose. All right, the second last one that I want to share with you is a very, very simple concept, but yet for many people, you don't follow it. It's the saying of buy low and sell high, right? You want to buy an asset that is quite low or relatively low according to how the price has performed, and you want to sell it when it reaches perhaps its all-time high, or perhaps it's in above range, not to buy high and sell low. Again, getting back to the reason of buying high is perhaps, again, you heard about a certain stock that has done quite well, so obviously has gone up quite a lot, and you buy high, right? It's not low here. You buy high when all the hype, and you keep holding it. Sure, yeah, maybe made you money in a very, very short term, but then it starts going lower because people are taking profits, or perhaps the positivity in the price has evaporated or has gone away. And then obviously it gets to a point where you can't take the losses anymore and you sell, right? So that's a scenario of buying high and then obviously selling low. So what I want to share with you in terms of how to beat the markets in 2025. Now, obviously the markets are very, very close to all-time highs, just at least in the US markets, is you want to look at opportunities where that are out of favor, right? Where you can buy it relatively low relative to where it was before. Now, obviously, I'm not saying that just because you're buying an asset at low price, it will go higher, but look for assets for that are perhaps undervalued. Perhaps they're not loved by Wall Street, but you feel that there is substantial growth or value in those type of assets, and you're looking for a recovery in that. Now, again, I want to reiterate is that just because you buy low doesn't mean that you can sell high. But I can tell you that if you consistently buy high relative to buying low, right? Obviously, again, not saying that you're buying a terrible asset, but consistently, if you can, over the long run, try to buy stuff low and not try to buy stuff that's already high, you will make money. Okay, it's like you're trying to chase last year's performance. You're buying, let's just say example, buying a stock that has gone up 300-400% last year, and you expect to keep going up in 2025 relative to an opportunity where you feel it's undervalued. It has gone down maybe perhaps 30, 20 or 50% down last year, and you're buying it this year in 2025. Okay, which type of scenario would make you money? Now, obviously, I don't know, right? Both of them could go down, both of them could go up. But what I'm trying to convey to you is don't necessarily just keep chasing the highest performers last year and expect them to perform the same result. Okay. Now, can a certain stock gone up 300% this year, or sorry, 300% last year, go up another 300% this year? Of course. But instead of doing that, you run the risk of, let's just say, again, the stock or the asset underperforming this year, and hence, or people taking profits, and it will actually go down relative to an opportunity where it's being overlooked, and perhaps in 2025 people would love it because it's undervalued, or everything has already gone up quite a lot. Now they're positioning themselves in certain assets that have the potential to go higher in 2025. Okay, so hopefully you get the picture that I'm trying to convey to you. Is now there's a saying, you can buy high and sell higher. Sure, okay, no problem with that. But again, if you want to look for bigger gains and how to beat the markets in 2025, try to look for stocks that are undervalued or unloved in 2024. All right, the last one that I want to share with you, okay, is avoid risky markets. And what do I mean by that? What I mean by that is essentially you want to avoid scenarios or timeframes in the markets where there is going to be lots of volatility. There are going to be scenarios where there is going to be some negative catalyst coming in the markets. It could be, the turn of of the U.S. President inauguration day, right, where everything is going up prior to that day in terms of the new president's policies. It could be some type of war. It could be some type of conflict. Now, obviously, we don't know certain incidents that could lead to a crash or a correction in the markets, But what I'm kind of sharing with you is that once you start to sense that perhaps again you suddenly see a sharp 1 day drop in the markets, and instead of trading back the next day, is that maybe stay out of those markets. And particularly if you are a swing trader who is trying to find trends in the markets, when you have big drops in the markets, you're going to have lots of volatility. Now, unless you obviously are betting on the downside, if you are long only, I'd suggest you avoid and not trade those risky markets. Wait for the markets to stabilize before you get in. And there will also be, again, scenarios where there is market moving news that is going to be coming out. Then what you should do is, during those period of times, don't trade, right? You don't have to trade every day. You don't have to trade every week or every month. But in order for you to beat the markets in 2025, it's not just about trying to find certain stocks, certain sectors that will outperform. The goal for you is try to minimize your losses. Now, you will all, hopefully you are a somewhat, average trader, that you will have some profits, and then obviously you will have some losing trades as well. So what you want to do is, if you want to increase your profits, try to make less mistakes. Try to not trade certain markets or certain risky markets in 2025. All right, before I get to any questions that you guys have, next week I will be talking about how to find your trader's edge in 2025. How do you determine what you're good at? How can you determine what's your advantage that you have? Maybe perhaps it's certain analysis, certain research, certain skill set, right? You got to know what is your edge in the markets, that you have a statistical edge. Maybe perhaps you're very, very good at cutting your losses quickly. Maybe perhaps that you are, your analytical skills are very, very good in identifying undervalued companies or certain catalysts. Maybe perhaps your edge is being able to capture volatile markets. Whatever that is, I'm going to be sharing that with you next week. All right, guys, so any questions that you guys have, please type them in the question box below. KA says, no one can beat the market except those having insider's knowledge. Retail investors traders will always remain hand to mouth. Mike, hope you will show us your P&L at the end of the year. All right. Now to address in terms of how to beat the markets. Now, obviously, I've already talked a lot about that. What I'd like to kind of say to you is that in trying to beat the markets, partly it's really about you. Okay, and hence this is the reason why I host a lot of host these weekly psychology sessions. Is quite frankly the biggest barrier to your success, or the biggest barrier in terms of you being able to beat the markets or not being able to beat the markets, is yourself. And hence that if you obviously need the knowledge, you obviously need the strategies, you obviously need the timing, execution, risk management, all that type of stuff. But partly what I can share with you is that if you can just be in control and not beat yourself this year in 2025, you have a much higher probability of having success and being able to outperform the markets. Because quite frankly, if you look, and for those who are experienced, if you look at your past trades, okay, your past history, if you can stop not doing certain mistakes in 2024, or certain mistakes maybe perhaps it was a mental mistake, or perhaps not being able to cut losses quickly, all that type of stuff. If you're able to eliminate or minimize some of those in 2025, I can probably say confidently that you'll be able to at least, again, outperform the markets, or at least in some sense not have you as the biggest barrier to your success in 2025. All right, Dennis says, hey, Mike, sorry for being away a while. Yeah, but Dennis, haven't seen you on my live streams for quite a while. Is there a way to find cigarette butt assets so we can prepare for the breakout? Okay, I'm not too sure what you mean by cigarette butt assets. I mean, in terms of just talking about like breakouts and stuff like that, is you want to, like, when these type of breakouts happen, okay, or in terms of a certain surge in one direction, up or down, you are essentially looking for sectors, you're looking for stocks, you're looking for assets that essentially are not trending. Okay, quite frankly, that's, I mean, that's, maybe that's what you're referring to, is just basically just going flat. So look for sectors that have basically no clear direction. Okay, whether it's up or down, it's basically just going sideways. So look for and dig into it deeper. What are some of the potential catalysts for this sector to go up this year or go down, right? It's basically, when we see stock prices go sideways, it's essentially a balance between the buyers and the sellers. No buyers are going to be very aggressive to buy, and no sellers are aggressively looking to sell. It's basically in a range. So look for catalysts that you think in 2025 could be the catalyst for the price to break out or break down or go lower, right? And then look for those sectors that are exhibiting this long consolidation area and keep it on your watch list, so that once you start seeing signs that maybe perhaps momentum is increasing towards the upside, maybe you start to see volume, right? Maybe you start to see buyers come in, right? Maybe you start to see certain relative strength relative to the market's perhaps going lower, but yet you see the price of the sector or this stock is actually just going sideways. It's acting quite strong relative to the market. So you want to look for those signs where it's not doing much, but at some point it will. And when it does, you're ready to pounce and to capture the trend out of that consolidation, or on the upside or on the downside. All right, Brian says, Happy New Year, Mike. Yeah, Happy New Year to you guys as well. Happy New Year, Brian. All right, again, today's live stream, we are finishing off. So again, next week, I'm going to share with you how to develop your trading edge for 2025. So thank you all for attending today's live stream, and I will talk to you guys next week. Have a great one.